Hi guys, nice to meet you all. To start our conversation, I wanted to ask you to quickly introduce Jeeves and Keep Financial to our audience, please.
Sure. You want to go first?
You can go first.
I'm Dileep Thazhmon. I'm the CEO founder at Jeeves. Jeeves is building a global business bank. We operate in about 24 countries, corporate cards, B2B payments, working capital loans, et cetera, et cetera. We have about 4,000 companies that use us today.
Great.
Catherine Petralia, co-founder of Keep Financial. We're a baby company. We just started this year, and we help employers provide upfront cash compensation to their employees that vests over time, a lot like options, but with cash.
Okay, guys. We are here talking about winning hearts and minds before wallets. So what's your strategy for that? Starting with Catherine, please.
So I think customers are willing to do a lot of things you don't expect they will do if the outcome is good for them. So our last company was called Cabbage. We serve small businesses. And we sold to American Express in 2020. And what we found is that our customers were willing to give us all kinds of data that nobody thought they'd be willing to share because they were looking for a line of credit that we were providing. So I think the way to win the hearts and minds of a consumer or a customer that has to do something extraordinary for you, for your business to work, you have to make it worthwhile, and the customer experience has to be fantastic and easy.
Yeah, no, I agree. I think one of the things that we try to do is, one, make it clear what the benefit is for the customer. So there's almost like an evangelization phase. And then two, it's kind of like a trade-off, right? To your point, I'm going to give you the information, but what am I getting in return? And a lot of times, I don't think it's clear to the customer what that return is. So for us, it comes back to the messaging and just being very, very clear of here's what you're getting from us, that if we didn't have this information, we need access to your bank account to get an idea of your cash position, because that's how we can underwrite you without having to take any collateral, right? So there's a trade-off of what you're getting for giving us that. So I think that evangelization is a really important part to kind of get there.
That's what you're doing in your companies, right? And venture capital is facing very hard days, as you probably know. Do you think that can be a good thing after all? Because fintechs can now concentrate more on the winning hearts part of the business?
In what sense? In terms of the venture capital coming in?
Yeah, if you have a fintech, now you're not concentrate more in raising more money and more in attracting new customers, new companies for your product.
Yep. So I think capital is good and bad, right? Because capital, especially if you raise a lot of capital, we have raised a lot of capital.
Yeah.
It gives you runway, but you also don't become as lean as you probably need to, and you try a lot of different things. So it's in some ways good that the cycle is happening, because a lot of things that, we had companies that would be like, why haven't you started Jeeves Ventures? And I'm like, that's not core to our business. That's not what we do.
Yeah.
We're not looking to invest in other companies. Our core business is building this banking component. And I think a lot of companies, when they have a lot of money, you start losing that focus. And now, because of the market, because of what's happening across different economies, I don't think people have the luxury of doing a lot of different things outside of your core business. And coming back to winning hearts and minds, it's always easier when the message is clear. And when you have multiple things that you're doing, which is funded by capital, et cetera, that messaging is not clear, and it's much harder to win kind of those hearts and minds.
Okay, and what do you think about that, Catherine?
I agree completely, especially on the mistakes that can happen when you have a lot of capital. I think the challenge that fintechs in particular face is that a lot of them are capital-intensive businesses, and so sometimes you have to go to other types of capital sources in order to, to make your business work. So it's an opportunity to look for venture debt or, other ways to allow your business to continue to run, because money is the fuel behind that business. So I think the one thing that's valuable, we're lucky at Keep that we raised money in February, so we just, for our seed round, but it allows us to experiment. And I think if you're short on cash, then you don't experiment with how you can how your product works or how you find new customers or anything like that. And that experimentation is really, really important. And when you don't have capital, you don't do that.
Okay, and Jeeves became a unicorn very quickly at a hard time for who wants to raise money. And how did you gain trust from your investors and customers in such a short time?
I think so two thoughts on this. One, I think when founders look at doing rounds, they don't spend enough time on cap table construction. One of the things that I tried to do is every round I tried to have people in that could potentially lead the next round, because the biggest thing investors want to see is that you said something and then you did it, right? And so they want to have that track record that they can then invest in. And so the best way to do that is even taking a smaller check for potentially giving that information to an investor for the next round. So I've been very conscious in the way we've structured our cap table, in the way we've looked at doing rounds. We did our Series A last year, Series B last year, and a Series C this year, so in 12 months. But it's because they have that trust in what we're doing and they see the numbers month to month, right? It's much harder to just go into the market brand new and be like, hey, let's do a round. But yeah, exactly. But if they've seen it for 6 or 8 months, then they want to do it before someone else does it. So the cap table construction, it's an art and a science. And I think a lot of times people just look at like getting money, but it's not about the money. It's who's the money coming from and how are you setting yourself up for success in the next round.
Okay, and talking about track record, Catherine already had a huge successful track record with Cabbage, right? What's the importance of that for someone who wants to disrupt a market like finance, to have this strong track record?
I think the track record just makes it easier. It took us 2 years when we started Cabbage to get our Series A. And that's because we were some old people from Atlanta that the people on the West Coast had never heard of before. We got on a plane for every dollar we raised. It came from the West Coast early on. It came from New York. It came from Asia. It came from Europe. We raised money all over the world because it was really hard to raise money in Atlanta where we were based. But now for our next company, we had like 2 meetings and we got all the money we needed. So it was really amazing to have that experience. And I think VCs do think about, where are you in your experience on starting a company? They love to back new founders, but I think they feel really safe about betting on a serial founder.
Okay. And I would like to know how the regulatory environment is affecting the adoption of fintech products by companies and consumers. It helps, or it is still a hurdle? How do you see that?
So we operate in 20 countries, so it is definitely a hurdle.
It's a different answer.
Yeah, it's different in each country. But I think it's a good thing. I don't think that's necessarily a bad thing to have kind of that regulatory burden. I think if you look at, again, what we do, we don't necessarily take deposits. And one of the reasons is your regulatory burden is much higher if you take deposits because you need to know where the cash comes from. So our whole engine is built on credit, but that's also why we're able to move so quickly, because we take some of that underwriting risk, and so we have to build like collections and underwriting. We have other things we need to build, but the regulatory component is a little bit easier on the credit side versus debit internationally. And we only do businesses. We do not touch consumers, right? It's only B2B businesses. So I think one of the things is when you start a company, you kind of overthink it a little bit on the regulatory side, and really the goal should be finding product market fit. That's it. And then you come back and you're like, okay, now let's make the box like stable and get all of the regulatory components filled. And so that's where we are now. Like what worked when we had 500 companies using us does not work when we have 5,000, right? And so we invest a lot of time, a lot of money on kind of compliance and regulatory right now.
And how do you see this, Catherine?
I think that regulation spurs innovation in many ways because it pushes entrepreneurs to find new ways to do things more simply, because regulation is often old and cumbersome and not appropriate to today. And the example I'll give you for that is in the US, the only way that you can make a loan to a consumer is if you want to get credit bureau data to do that, you have to only use certain data to make your credit decision. It's the Fair Credit Reporting Act. They govern this. And you cannot use social data in the US to make a decision. There's a lot of really amazing data out there that says a lot about people who are new to the country, people who are new to credit, people who are rebuilding their credit. And that data can't be used because the regulation that was made in the 80s didn't contemplate that there might be new data. And so that pushes people like us to find a way around that, to make it work differently, to push the regulation to change. And I think that's a valuable cycle.
Okay, and Dileep, I'm coming from Brazil. I'd like to hear from you. How do you see the regulatory environment in Latin America? I think it's a very important market for you at Jeeves.
So it's country specific. I think Brazil has done a lot on the fintech side, especially with Pix. I mean, the adoption on Pix has kind of just been crazy to have a completely new rail in get 70 to 80% adoption in less than 2 years. So I think Brazil is very innovative in terms of kind of the fintech landscape itself. I think the regulatory side, we're not looking to do this without working with the banks, without working with the government, without working with the regulatory bodies. But I think the countries that innovate quickly realize that what fintechs do is different from what banks do, and both of them can coexist. It's not like Jesus is never going to be taking over, the 5 banks in Brazil. Like they're always going to be there. We're playing outside of that. There's still a big lane, and there's still a huge opportunity for what we can do. But you can coexist, and I think countries that realize that then start pushing legislation. Mexico did something similar that encourages this fintech development, and countries that don't see that try to just hold it in the bank, and that's where I think you lose innovation and you lose kind of companies coming in. And even like what we provide, it funds new companies starting in that region. So if you didn't have the banks, the innovation on PIX and like the government legislation in Brazil, we wouldn't be able to operate there. So I think it is something where you can coexist, and it's good for the whole ecosystem to have fintechs that are good at some things and banks that are also very good at some things else as well.
And what can you tell me about your future plans on raising money? Are you planning to do that very soon? What do you expect?
Well, it's funny, back to that conversation we were just having about how you structure and think about raising money. We could go a couple years without raising money. However, we have a lot of meetings with investors. Even now, I had one this week, and I'll have some more next week, because you want to build those relationships. You want to talk to the investors that you want later, and at some point, the investors will push you. They're like, okay, we need to write a check, it's time. Let's raise some money. So well, it depends on, to fuel your growth. So I suspect we'll raise money in the next year. That makes sense to me.
Okay, what about you, Dileep?
I mean, we're not raising money right now because we just did a Series C in April. But kind of similar in the sense of like, if you're a growth company, I think the only distinction is a little bit of like investors now have a lot of time, and very few of them are actually writing checks, so they would love to get more information. And I see information as part of what you should control as a founder. So if I'm giving the data room or starting the information, I'm very clear I'm starting to fundraise. And until that point, I don't provide any information, right? So, for the company itself, we have multiple years of runway. We just did a round, so we're pretty well positioned. We have our internal goals that we want to start hitting next year, and then we might take a look, at the end of next year, et cetera. But I think a lot of times that information, the investors want to get it earlier because that's good for them, and as a founder, you don't have any leverage giving that out if you're not fundraising. So I have no intention of like taking those meetings until we get closer to a point where I'm like starting to look to raise.
Okay, and talking about macroeconomics, I'd like to know how interest rates hikes are affecting your business. It's an important thing for you?
For Keep, I think, we're serving employers, and, employers that have cash that they want to use to give to their employees. And so employers are earning more money right now, and we are too on the cash that we have in the bank. So I think for us it's probably neutral to positive in general for employees. I think more of the challenge is just around getting access to capital that they can use to invest and grow wealth and build wealth over time.
What about
I mean, it definitely impacts the business. I think in 2 ways for us. One, we actually have seen a lot more demand for the product, but the risk profile is changing. And so, we are probably not bringing on as many customers as we would in a normal cycle because of the macroeconomic climate and because the cost of capital has gone up. So that's one.
The growth rate is slower right now, right?
More the risk itself is changing. So like our underwriting criteria has changed from what it was maybe like 8 months ago, because the rates are going up. They might not be able to raise. They might not be able to get access to capital. If they can't pay us. So all of these things kind of go into that box. And then I think the second one is just like how much you charge, right? So as the rates increase, we have to increase what we charge as well, because that's how we get a spread. And then it offsets kind of any losses that we have as well. So it definitely has an impact. Internationally, you'll see it even more, especially in Latin America, because the spread, as it goes up, the amount you can charge also goes up tied to that. So not even us, just the local banks charge a lot more, right? And so that's exactly what's happening. And so we become a more attractive option, but you're also not necessarily getting the subset that is a good risk profile, right? So that's kind of where we are right now.
I would add actually to that the impact on entrepreneurs and their businesses, venture-backed businesses, is that higher rates are actually taking some investors out of the market because the more conservative investors that are seeking yield are comfortable in more conservative vehicles, and they don't invest in these kinds of vehicles as much when the rates are higher. So I do think the combined effort makes it harder to raise money.
Okay, and to end our conversation, I'd like to hear from you about your plans for the future for Keep Financial and Jeeves. Where are you planning to introduce new markets you want to explore? Starting with Catherine, please.
Sure, our goal is to change compensation. It's a $60 trillion total addressable market globally, okay. And we want to put the power in employees' hands to determine how and when they get paid, because every employee is in a different situation financially, and so they need different things at different times in their lives. So Shopify recently announced that they're going to allow their employees to determine how much they're getting via cash and equity, and so we want to make that available to every employer around the world.
You want to go beyond US, right?
Absolutely. That 60 trillion is a global market.
Next year?
Yeah, next year 100%. We'll be in other countries.
Starting with Europe or Latin America, where do you have in mind?
I'm not telling you.
And what about Jeeves?
So we operate today in 24 countries, right? So we have Spanish-speaking LATAM, US, Canada, UK, Europe, and we just launched in Brazil. So we're not planning any new expansions in the short term, meaning the next 6 to 9 months.
You have to consolidate those markets.
Exactly, and it's massive markets, right? Where you're talking about like just massive opportunity there. So a lot of it, honestly, this year has been more on kind of just tightening the business itself, like focusing a lot more on margin, focusing a lot more on just like the unit economics, like all these core things that are fundamental to like running the business. And next year, probably in the second half of next year, we might do 1 or 2 kind of launches internationally. We're still figuring out where. Southeast Asia has always been kind of on the landscape. I just don't know if it's going to be next year or the year after that. But our goal is to build a global business bank. And if you're building a global business bank, you have to be in multiple countries and continents. And the idea is you open a Jeeves account one time and you can use it in any country because we will switch on the back end for you, give you local cards, et cetera. So it's fully in the plan to get there. But I think this year and probably half of next year is still going to be about fixes and just making sure kind of we can scale from 5,000 to 50,000 without the system breaking, which is kind of where we are today.
And are you planning to introduce any new products?
Yeah, so we are beta testing a product called Jeeves Pay. And the idea there is you can use your own credit limit. So if you come to Jeeves and we underwrite you for 100K and you give you a corporate card, you can use that 100K now to send wires and payments across 100 countries. So think about maybe TransferWise, but with credit built into the Jeeves platform. So that's a big launch that we're doing actually starting now through the end of the year. And for us, we've seen a lot of traction on that, a lot of new revenue coming in from that. So pretty exciting, and hopefully makes people's lives a lot easier because you have all of your payments, including card, ACH, SEPA, SPAY, et cetera, in one platform, and we provide credit against it.
Everything on the same place for a company who has a global ambition.
Exactly,
to operate
that's exactly
in many
right.
countries.
Yeah.
Okay, guys, thank you so much for this
Thank
conversation.
you.
It was a pleasure.